fund data coming in for the month of June. We have Anthony Heredia, who's the Managing Director and Chief Executive Officer at Mahindra Manulife Mutual Fund, joining in to detail these numbers, or rather give us some more insight into these numbers. Thanks a lot for joining in. You know, the one thing that really stands out is the consecutive outflows that we've seen in the large cap funds for 2 months. Small cap fund inflow at close to 5,500 crores increased substantially over the previous month, and the mid cap fund inflow as well, increasing over 60% as compared to the previous month. So is there a trend that will continue given the outperformance that we've seen of the mid cap and the small cap funds, or do you think at some point the large caps will also make a comeback?
So in my view, I think this trend has got some legs. The momentum which started with a commentary on valuations being in favor of small caps and mid caps has meant that the liquidity in the last 3-4 months in this space has been unprecedented. I don't see any significant change. And in fact, the earlier thought on large caps was perhaps underperformance relative to benchmark. But as we speak, large caps have actually outperformed benchmark to the highest proportion I've seen, at least in the last 6 to 9 months. So my guess is that for the next 3 to 6 months, we will see continuation of this trend. Small and mid caps, and to some degree multi-cap funds, will see a bulk of the gross flows. And large caps, I think, will continue to see tepid flows for sure.
Okay, well, we have Suresh, Soni, Chief Executive Officer at Baroda PNB Paribas Mutual Fund, joining into this discussion as well. Suresh, hi. Do you echo that view that, we are going to see that alpha come through for most retail investors by investing in mid caps as well as small caps and probably holding back their investments in large caps?
Indeed, the equity flows have been decent, driven by both the market performance over the last year as well as more recent. In the last 3 months, if you notice, the markets are up about 14% on Nifty and a little more in mid and small cap indices. So it's an all-round equity flows that we are witnessing, a slight more accentuation in favor of mid and small cap. That is also driven by a little bit outperformance that we have seen in that area.
No, I think Ekta's question was more about what do you see as the way forward? There has been, of course, a big outperformance in the small and mid-cap space, but that's only just beginning, right? For an investor who's perhaps watching you right now, do you recommend continued investments into small and mid-caps through the mutual fund route? And do you think this is just the start of what could be perhaps a multi-year upcycle?
So mid and small caps by nature tend to be a little more volatile than the large cap. And therefore, both on the downside and upside, their beta tends to be a little higher. Lately, we have seen the outperformance. But this is also a category which over a period of time generates better return than large cap investments. And therefore, for investors who are looking at, let's say, 5 to 10 year time horizon, they should have no worry putting money into mid and small cap fund. But somebody who's looking to time it and wants a repeat performance of the last 3 months in the next 3 or 6 months, that's going to be difficult. So I would say medium long-term investors, stay invested. If you have some short-term trading mentality, it may not necessarily be the right time.
Right. What are your thoughts on, what do you say, active funds versus passive funds itself? Do you think it makes sense for more money to go into active funds from here, or passive funds also offer some opportunity?
So this is an ongoing debate that continues all the time. My belief is there's a space for both the product. It's not active or passive, but it's active and passive. The markets like India continue to offer good opportunities for investment outperformance by active managers, and therefore active managers will continue to have play. However, for some people who are either institutions or people who don't want to take a call on manager outperformance, the passive fund offer a reasonable alternative. So it's both the segments will grow. I personally invest more money, and I personally encourage people to consider well-managed active funds.
Okay. Anthony, we've been discussing how there is more interest in the small and mid caps versus the large caps. But do you think overall there could be some amount of caution which could just seep into investors as an overall strategy of investing into equities? We could probably look at more investing in multi-asset funds simply because of the kind of run-up that we've seen. And are people probably getting a little cautious and taking some money off the table, booking some profits now?
So people are definitely cautious because what we're seeing is obviously much higher gross flows in small and mid cap. Now, historically, these are not the largest asset classes in terms of funds, and which is why the redemptions are lower and you see the net flows looking like what they do. But we're actually, and I know a lot of distribution partners that we have are recommending to clients that probably look at multi-asset funds, look at multi-cap funds, look at flexi-cap funds, rather than a one-dimensional approach, which kind of looks at the last 3 or 6 months of outperformance in a particular cap, and then believes that that will be the trend that will be true for the next 2-3 years. So I would say there is a bit of caution, and it's seen in the redemption numbers as well, right? Just as you have, I would believe, the highest gross flows in the month of June for probably the last 3 to 6 months, you also see the highest number of redemptions as well. So there's enough of money being taken off the table as well. And we believe that's in conjunction with the view that most people are taking, which is stick to multi-asset, multi-cap funds rather than only focusing on small and mid-cap. That's our view as well.
Sure. Just one quick question, Anthony, on what the update is or what the expectation is on debt funds now. Because about, 6-8 months ago, that was a big buzzword before the market sort of resumed its uptrend. How have the flows been into debt funds and what's the expectation? What's the prognosis?
So the prognosis, I don't think is very great. Honestly, I think we have to be realistic, right? Look at the alternatives. You have bank deposits or corporate fixed deposit rates, which are probably at their peak looking forward the next 3 to 5 years. It would be amiss of me to tell clients that, you should still look at only debt funds. I think that's a very good alternative. But Sonia, I made this point a couple of months back as well. I think multi-asset funds then come and play the role of the fixed income allocation. And I would actually believe that in the next 6 months to a year, that category will be a leading category in terms of flows. And I think the industry will probably get its share of fixed income flows through that rather than plain vanilla fixed income funds.
All right. And finally, Suresh, a question on hybrid fund. I mean, we've seen the inflow come in close around 4,600 crores. This number last month was close to 6,100 crores. After the debt taxation, or rather, the taxation related issues, this became an attractive space for people to put their money in. But now, do you think that it's peaked out and from here on, we'll only see reduction in this number? What are your thoughts on the future of hybrid funds?
Good flows in hybrid funds, and a large part of that flow is also driven by a category called arbitrage fund. Arbitrage funds are driven by both the spread in the market between equity, cash, and future, which tends to be high when the markets is buoyant. So in arbitrage fund, it's been a double whammy of positives. Spreads have been high. And also, as debt taxation becomes relatively less attractive, arbitrage funds appeared pretty much more attractive in relation to that. So that category, to my mind, will continue to grow, continue to see flows. Overall, hybrid funds present a very good opportunity of balancing both equity and debt from exposure perspective, as well as giving a tax-efficient exposure to debt category also to investors. And therefore, my belief is this category should continue to grow. It also works very well for people from a risk management perspective.
Okay, all right. We'll leave it at that. Thanks a lot for joining in and helping us analyze the June mutual fund data. Appreciate your thoughts, gentlemen. Let's slip into a short break. On the other side of the break, we'll connect with Mahesh Palawat, who's the Vice President of the Meteorology and Climate Change Department at SkyMet Weather, to find out about what's